Okay, welcome back to the channel. So in this video, we're going to do something a little bit different. We're actually going to be talking about long-term investing. I want to show you guys the 3 different portfolios that I'm working on, and I'm developing them slowly. I'll only have like several shares in each account, but I'm sharing this with my viewers to maybe give new people an idea of what it's like to slowly build a position, to buy stocks, and just give you an idea of like where to get started, right? Because a year ago, or 8 months ago, around the time of the crash in March, I was very just intimidated to even get started in the stock market. And it's been quite a learning curve to overcome, but it's not impossible. There's an entire industry out there that is dependent on us being financially illiterate, right? They want us to believe that we need them. They want us to believe that we can invest our own money and manage our own money, and that's simply just not true. I mean, to get a 6% gain every year and maybe double your money in 20 years, right? Like, I guess that's good if you're not going to apply yourself at all, right? If you're not going to put any effort, if you're going to put zero effort in, okay, doubling your money in 20 years, getting like a 6% gain on a yearly basis, I guess that's okay. But most of us can do better than that, right? Like, let's just be honest with ourselves. Most of us are capable of getting more out of the market than 6% a year. So that being said, I'm sort of just sharing this to inspire maybe new people in the stock market, and I'm just documenting my portfolios here on YouTube. So I'm going to be doing updates, and we'll see where this goes. I definitely intend to grow all of my portfolios. Now, that being said, we are going to talk about Robinhood, WeBull, and Ally Financial. Okay. By the way, if you are interested in getting an account with Robinhood or WeBull, use the link in the description down below. If you do, you will get free stock and I will get free stock. It's a fantastic way to start a brokerage account, right? Start with free stock. Now, I just received 2 more free stocks because a viewer of mine did use the link. And so I've got a $13 Levi stock coming. And then I've got UBS, which I think is about a $12 stock right now. So I'm going to be selling both of those when I get them. And buying, Workhorse or Neo or something like that. So, just putting that out there. Robinhood is probably the easiest to use, but WeBull is definitely an extremely powerful broker, and I use both of them. So with my long-term portfolios, one of them will be on Robinhood, another will be on WeBull, and the third one's going to be on Ally Financial. I like Ally Financial because I've got a checking account, I've got the investing account, and I've got a Roth IRA that I haven't contributed money yet, but on WeBull as well, I have a Roth IRA. So I've got options, but I've already put about $600 across a few different platforms here. And I've got another $500 that I'll be investing starting tomorrow and going into the next week. And then after that, we're going to talk about 3 particular stocks that I am very bullish on, right? One of them being Exxon Mobil. We're going to talk about that, and we're going to talk about where the stock price is. Now, the stock price is actually falling, and a lot of people are trying to get out of Exxon Mobil right now, but I am bullish on Exxon Mobil long-term, 5 years, 10 years. And then a couple of more are in the electric vehicle space. Probably not what you're thinking, which is Tesla, but a company called Workhorse, and then a Chinese company actually called Neo. So we're going to talk about that. In fact, the electric vehicle stocks almost works as like a hedge to big oil, right? If big oil does fail, and if I'm wrong about Exxon Mobil, at least I'll have my foot in the door in a completely new emerging market, which is electric vehicles. So, and then after that, we are gonna talk about Apple, because this week I plan to day trade Apple, and I just want to talk about where Apple is at, where I think it could go the next couple of weeks, and so we will do a little kind of like a little day trading segment. So stick around. Please do give the video a like if you learned anything, or if you enjoy these portfolio updates, if you want to see more of them, and comment down below. Let me know, where are you putting your money? So without further ado, let's go ahead and get into this. I think where we're going to start is Ally Financial, only because, this is probably going to be a dividend portfolio like Robinhood. So we'll do Ally Financial, Robinhood, and then we'll look at my WeBull portfolio, which is a little bit more speculative. And that's what I would suggest too. If you are going to have multiple brokerage accounts, don't do the same thing in each one, obviously, right? You're going to have one that's for dividends, have another for growth, and maybe another for like day trading or options trading, something to that effect. And by the way, this is not financial advice. Please consult a financial advisor if you feel like you need to. Do not do anything I do. Don't purchase the stocks just because I purchased them. This is just for ideas, for inspiration, and for the feedback from you guys. So this account value is a little bit less than $200, right? Or a little bit less than $300, right? The account value in my Ally brokerage account is about $270. Now, I am already down about $9, okay? But I'm not worried about that. I should have probably waited till Friday, like 2 days ago, to actually buy these stocks, but you really can't pick the bottoms. What I'm doing is slowly averaging in, right? And let me say this too. The reason, I haven't spent $500 on one particular stock in one of these accounts is because, I want to average in over time, because we can't pick the bottoms, and we certainly don't know if we're at the top. So if you buy the stock all at once, you're taking a much bigger risk that if it does drop tomorrow, or drops for the next week, or drops for the next month, you're going to be sitting there definitely holding a really big bag. But if you purchase a few shares, wait a few days, purchase a few more, wait a week, you're going to average into the market, and it just helps you to minimize the losses a little bit. So I hope that makes sense. So we have one share of Apple, right? I got it for about $115. It's now down to about $112, right? Not that big of a deal. I plan on buying 2 more shares of Apple this week. I'll probably buy 1 share tomorrow, depending on where the price is, and perhaps another share on Tuesday. I might just buy 2 shares of Apple tomorrow in this account, but we'll sort of see where we're at. I have the Apple chart right here. If Apple is looking like it's going to make another try to break its previous highs there from a few days ago, I might only buy 1 share, because I think Apple could see about $100 a share, and I want to minimize my my loss, or my bag holding, I should say. But there's 1 share of Apple in there, and it's I'm really excited about it, right? We've got Sirius XM Holdings, all right? And by the way, all of these are dividend stocks. Apple's a dividend stock, and so are Siri, T, and Exxon. Siri is satellite radio. It kind of goes along with the electric vehicle market, because a lot of electric vehicles actually come with a Siri subscription, or they come with like a free trial to Sirius XM. And so I have 3 shares. My average price is $5.65. The price is now down to $5.47. I do plan on buying more Siri as time goes on. It's, in my opinion, a fairly stable stock. The price doesn't really move much from like $4 to $6, and it's a great way to park your money. You get a small dividend. I think it's like 5 cents a share. I don't know if that's every quarter. I think that might be every quarter. But from everything that I've looked into, and a lot of the different YouTubers, successful stock trader or stock investor YouTubers that I watch, Siri is definitely a highly recommended holding, right? Even Clear Value Tax has Siri in their public portfolio where people can kind of join along. And so yeah, that's why I have Siri. I also have Siri and Robinhood, which I'll show you. We also have AT&T. I have 1 share. It says I'm up 0.3%, but I don't know. There's something wrong with this calculation, because my cost basis was $9.61 or $29.61, and the stock is $29. So I don't know, some kind of weird glitch there. I've noticed that too. Ally Financial kind of is a little glitchy with some of their calculations. And then Exxon Mobil, we have 3 shares. Like I said, we are going to be talking about Exxon Mobil. I'm extremely bullish on Exxon Mobil. Let me actually just show you the chart for Exxon Mobil, because it is kind of scary. You know, if you didn't know exactly what was going on, right? So this is the crash in March right here, and this is where we're at today. Okay, so it looked like Exxon was trying to recover, but, you know, these shutdowns, the lack of oil demand right now, there's a lot of factors that go into this. Oil tends to be kind of cyclical, I think is the word for it. But it looks like we might hit near the March lows, right? We're at about $36 right now, and the low was $30.11. So it is quite possible that, I mean, I don't know if we're going to hit the March lows, but it's possible that we'll hit $35 for sure. It could go up from here, but that being said, I'm very bullish on Exxon Mobil, and I will explain why later on in this video. So that is the start of my portfolio on Ally Financial. This is just going to be for dividends. You know, I've got other ideas as well. I like INTC, especially over AMD, because AMD doesn't even pay a dividend if you're looking for like the semiconductor sector. I like Qualcomm, which is kind of like a 5G play. Same thing with AT&T, kind of a 5G play. You know, if I could get maybe some bank stocks like Bank of America. I really like Ally stock as well, which Ally is actually the first stock right here in my Robinhood portfolio. But yeah, going back to Ally, this is just the start. I plan on building this up and contributing to this every single week, even if it's like $50, $100, whatever. I'm day trading and using that income to long-term invest in the stock market. And I think over time, you know, especially these four stocks here, I think I am going to make money. Now let's go to Robinhood, okay? This is my Robinhood account. We have one share of Ally Financial, which we're actually up about $1 on. We have one share of SiriusXM. We'll be buying more of that. We have 2 shares of AT&T and 1 share of Exxon Mobil. Now, some people are going to say, well, why do you have like 3 of the same stocks, Sirius, AT&T, and Exxon Mobil, in 2 different accounts? Because I can have different size positions, and both accounts are dividend investing accounts. I'm going to focus more on probably, you know, the value stocks and the value plays, the banks and stuff like that. I'll probably focus more on Ally Financial, or in Ally Financial, focus more on the value. And in Robinhood, my plan is to focus more on dividends and also tech, right? Like buy some of the tech dividend plays. I haven't bought Apple yet in Robinhood, but I may eventually. I may actually do it this week, because with Robinhood, you can instantly deposit, or you can deposit and get instant buying power. You don't have to wait. But they will serve 2 slightly different purposes. Another thing with Ally Financial that I'll probably do is invest in real estate, right? I'll be getting digital REITs like IRM and stuff like that, which is something I might not do in Robinhood. But, you know, that being said, Robinhood I have a little bit more liquidity with, because I do have a cash account where basically I have a debit card, and if I liquidate my stocks virtually the next couple of days, I can use that cash if I needed to. So it's almost like a bank account in that way. Gives me a little bit more liquidity. And, you know, right now they look similar, aside from Apple is not in this one, and Ally is not in, or Apple is not in the Robinhood account, and Ally Financial is not in my Ally account. But that being said, these 2 portfolios will probably look slightly differently over time. But it's really just a way for me to build different sizes of positions and to, you know, just experiment a little bit, right? Because this is let me say this real quick. This is a very creative type of thing, okay? The stock market, investing, trading, it's unlimited creativity. I think that's why I love it so much, and why I just really got the bug as fast as I did. It's unlimited what you can do, you know, the different ways that you can make money. So I'm sort of setting up these 2 accounts. They look similar right now, but they will be slightly different. And it's 2 long-term accounts that I have. I was going to say something else, but oh, both of those accounts, Ally and Robinhood, I have signed up for the dividend reinvestment program. What does that mean? That means that my dividends, so let's say I'm holding Exxon Mobil, whatever money I get in dividends will be reinvested into Exxon Mobil. Now, I only have a few shares of Exxon Mobil, right? So, the most right now that I would get in dividends is like a few dollars, but it will buy fractional shares of Exxon Mobil. The reason that's important to mention is because you do still receive a dividend, a fraction of a dividend, if you have fractional shares. Now, the idea is over time when I'm buying more, contributing more money to the account, buying more, let's say Exxon Mobil, and then, my dividends are buying more shares or buying fractional shares, this is going to compound over time. So if you do this for 5 years, you're going to have, that money is really going to be working for you. And even if the stock price goes down a little bit, like let's say Exxon Mobil goes down to 30 and stays there for 2 years. Right? Let's just pretend, well, because you're buying more with your dividend money, your average cost is going down. And if you have to, eventually, you can just sell out of the entire position, right? So the loss can be minimized as well because you're constantly reinvesting your dividends, which is bringing your average cost down. And, you're building a huge position basically for free, right? Because you're just holding these stocks or holding these shares, and they're making you money to buy more shares. But so eventually you're getting free shares, I guess is what I'm trying to say. But both of those accounts I have signed up for I guess it's called DRIP. On TD Ameritrade, I've made a long-term account as well that I haven't contributed any funds to. But I did sign up for the DRIP program over there as well. So just, with the platforms that you guys are using, just be aware of that. You can you can easily reinvest your dividends. So on WeBull, completely different type of account, right? This is going to be for emerging markets. It's more speculative, right? This is not a dividend account, though I probably will add a couple of dividend plays like INTC, something of that nature, maybe like if I can find some fintech. But the WeBull account is specifically for long-term growth, right? That's what we're that's what we're looking for here. Whereas with the dividend portfolios, yeah, it'd be nice if we had long-term growth, but really what we want is the dividends, the stability, just have the money working for us, right? If some of the shares are worth more in 20 years, okay, I'm not planning on selling any of my dividend stocks, at least for like 20 years. So with this account, this is more for I'm looking to capitalize on this emerging market, which is electric vehicles, cloud-based computing, right? Any of this kind of stuff, AI. These are the sort of plays that I will have in here. So as you can see, we have 2 shares of Upwork, which is a service that it's basically an app where people can post for job openings, or if they need work done, they can post and people can respond, and you can get hired through this app. We also have NIO, the Chinese car company. We have Blink Charging, which is a company that from the States here, where they're building charging stations for electric vehicles. Now, I know Tesla supposedly is going to have their own charging stations, but regardless, if we're going to have electric vehicles on the road, we need charging stations. I want to be in Blink. I have 1 share of Shill or Tortoise Acquisition. This company just merged with Helion, and Helion is currently making natural gas trucks for Wegmans, the grocery store chain from Rochester, New York. So they're doing really big things. I am down on that by about 13%, but I only have 1 share. I probably will get more shares this week. Then we have CleanSpark, which is I have 4 shares of that, and you guys can see the prices here. I mean, let's see, the average price is like $8.85, and CleanSpark is they're basically building like microgrids it's new energy, right? New energy, sustainable energy. They're trying to tackle this problem in California where they're having all these power outages, and CleanSpark is definitely going to be a part of the future. Like if you do your research into CleanSpark, this company is going to be around for years to come, and they're going to grow. And then my favorite is Workhorse, right? Which we're going to be talking about Workhorse in depth, because I've got, we're going to be talking about this contract here with the USPS. But Workhorse, they're the company that builds most of UPS's trucks, and they're working on electric vehicles. And so, you can see there's a theme here to these stocks. They look very different from the stocks in my Ally portfolio or in my Robinhood portfolio. And there won't be much overlapping. Like there may be a little overlapping with Robinhood and Ally, but there will not really be any overlapping here. This is going to, Dropbox is another one that I want to try to pick up soon. And you can see as I'm with all three accounts, I'm already diversifying, right? I'm not putting, $200 into one stock because that's just stupid, right? I mean, sure, if I'm right about it, yeah, I can make some short-term gain on that. But there's no telling how long that's going to last. And, with these stocks, I want to hold them for at least 6 months, a year, a few years, right? And kind of see where it goes. Maybe I'll hold on to some of these for a while, like much longer than that. But, in each account, I'm already diversifying, right? I'm not spending $200 on one stock. I don't just have one or two companies in there yet. I have several, and I do think over time I'll be able to minimize my losses that way. And you go with the winners, right? I mean, if you have a stock that's working for you, you can keep it, or you can buy more of it. You can also make the decision if the stock is sort of going against you. For instance, with Exxon Mobil, I expect Exxon Mobil probably to hit about $35. Maybe $36, $35. It could hit 30. But regardless, I'm going to keep on buying to get my average cost down. I mean, I hope I can get as many shares as possible, before we start going back up on Exxon Mobil. But, I mean, these are just examples, right? This is just supposed to give you ideas, because, again, I really want to stress this, because I know there's people out there that really want to get into investing, and they just don't know where to start, and they're nervous about starting, and they're nervous about losing money. And, all of this kind of stuff was a huge challenge that I had to face. But in March, I don't know what happened. It just clicked with me when I heard about the stock market crashing. And I guess I knew about buy low, sell high. It just clicked with me that I need to get into the stock market. I need to start investing and start trading. So this is a way for you guys to sort of, especially people that haven't invested before, to see what building a position might look like. Okay. Now I could be wrong, right? There's no guarantee I'm going to make money. I could lose money in every single account, right? I know this, but it's highly unlikely. Like if you look at the stock market over time, like let's look at the SPY let's just look over the last 3 years. If you had gotten into the SPY 3 years ago, okay, you would have made money. If you even got in at these highs about 3 years ago, you would have made money. All right. And it's with every single index. Okay. This is just the stock market historically goes up. And when you look at 20-year charts, I don't have a 20-year chart on this software, but when you look at like 20-year charts or 40-year charts, stocks do go up, right? They do pull back, but historically they go up. And, there's no reason for us not to be involved in the stock market. All right. So that being said, let's talk about Exxon Mobil. There was an article from the Motley Fool about, Exxon Mobil and how safe is its dividend. And it's basically, you're going to see a lot of negativity, right? The fall from grace. It recently got kicked out of the Dow. Look at these subtitles here. The grim reality, right? out of options, right? What is in Exxon's control is its dividend, the Motley Fool says. But they go on to talk about how the dividend could get cut. All right. But then here's the thing. 3 days later, they released this article. 3 reasons not to sell Exxon Mobil. But I want to explain something to you guys. The reason I'm so bullish on Exxon Mobil is the way I see it. And I've looked at the financials. As long as they can pay that 8% dividend, you're basically getting paid just to hold the stock. And over time, I do believe ExxonMobil and oil in general is going to recover. We have a lot of sentiment out there towards green energy and getting rid of the oil companies, and it may be an ambitious thought that we're going to go green, we're going to drive cars off of solar energy and all this kind of nonsense, but it really is a leftist pipe dream, right? The idea that oil is going to be completely obsolete in 5 years, 10 years, or even 50 years. It's a leftist pipe dream. Okay. It's, these sort of green energy, Al Gore fans, right? The climate change warriors, all of these types, the Greta Thunberg fans. These are the people that are kind of living in that reality. But it's not reality at all. And the more and more I think about it, there's no way we're going to be able to run an economy, a global economy, without oil. Okay? Let's say ExxonMobil does cut its dividend. Its dividend is like 8% right now. So you get about, I think it's a little over $3 a share every year. Even if they cut that by 50%, let's say they cut the dividend by 50%, you're still getting paid a 4% percentage, right? That amounts to about $150 every year. That's still an incredibly good dividend, especially for the share price. I believe ExxonMobil is going to recover. I think someday we'll be back in probably the low 80s, maybe 70s, low 80s, maybe even higher than that, like where Chevron's price is right now. I do think ExxonMobil is going to recover. Oil is cyclical. I think that's the word for it. Cyclical, where there's cycles, right? It's kind of hot and booming, and then, investors go elsewhere. But they always come back into ExxonMobil. This is a once-in-a-lifetime chance. Let me bring up the ExxonMobil chart here. This is a once-in-a-lifetime chance for people that want to get into oil. People like myself who want to invest in big oil, all right? This is ExxonMobil's chart. This is the daily chart. And it is just plummeting right now. So people are scared of it. People are leaving it, right? This is when you get into the stocks. You don't get into the stocks right here when they're at their peak. Okay, that is not when you're supposed to enter the market. And a lot of people have. Do you know how many people are out there right now that got in around, what month was this? Maybe like, June. Yeah, like June 1st. To June 8th, right? They're thinking, oh, ExxonMobil's recovering. It's going back up. How many people do you think got in up here at the top at around $55 and are now holding a huge bag, right? You can see we're now at like $35. There are people that bought $55 a share and they're now down 20% on each share. Or no, not 20%. They're down $20 on each share. All right. So now is the time, right? You see all that selling volume. You see this price plummeting. Now, don't buy all your shares at once because I think we still got a little ways to go. I don't think ExxonMobil is quite at the bottom. It's getting near there, though. You see these bottoming tails on the daily chart here. It's getting near the bottom. But if you're, this is what I would do, and this is what I am doing. I'm buying shares, sometimes even one at a time. If the price goes lower the next day, I get another share, and this is how I'm going to average my way into ExxonMobil because we can't time the markets. And if you sit there and wait for the bottom to try to buy all your shares at once, right, it's impossible to do that. All right, and so I plan on holding ExxonMobil probably for the rest of my life. Like, this company is not going anywhere. Oil is not going anywhere. And anybody that tells you otherwise is simply out of their freaking minds, in my opinion. Like, I wouldn't listen to them. People who say we're going to be driving cars with solar energy and flying planes with electricity, they're out of their freaking minds. Okay. I'm not trying to make this personal or anything, but I'm not listening to those voices when it comes to my investing and investing advice. Now, that being said, I'm also extremely bullish on the new emerging market that is electric vehicles. Okay. Even though consumer cars, right, just people driving, average, everyday, ordinary people driving, even though that is moving towards more like greener, sustainable fuel sources or energy sources, even though I believe that and I want to invest in that, I don't believe oil is going to be obsolete. So almost as like a hedge to oil, right? Because what if I'm wrong about oil? What if I'm wrong about Exxon Mobil and it just completely goes down the tubes and never recovers? Well, I'm in this new market that is new energy, electric vehicles and stuff like that. And that's why I'm investing in companies like NIO, Workhorse, SHLL, Shill, Helion, Tortoise, whatever you want to call it, Clean Spark, right? New grids, new microgrids, stuff like that. That is why I'm investing in those companies. And a couple of them that I absolutely believe in are Workhorse and NIO. So let's talk about Workhorse real quick. Workhorse already builds the UPS's trucks. Okay, let's see. Workhorse, these UPS trucks that you see, that's a Workhorse truck. Okay, so they're already, this is an established company. This isn't a fly-by-night, penny stock or something, right? The shares are over $20 a share right now. But I think Workhorse has a long ways to go. Yeah, they're $23.74. All right, I'm already up like, let's see, over 10% on 3 shares in my WeBull portfolio. Workhorse is also probably going to end up getting this Postal Service contract. Okay, there's a very good chance they will. They submitted their proposal in August, and the news is going to be coming out shortly, probably weeks from now, about the contract. This is a $6 billion government contract. Some other companies that went for it were Ford. But see, here's the thing. When you do your due diligence and you look into this, Ford is actually laying people off. Workhorse is hiring 200 assembly line people. They've done deals with, I think, like General Motors, I think, has a stake in Workhorse. Workhorse has a warehouse where they're going to be building all of this stuff. There is a lot going for this company. All right. Do your own due diligence, obviously, but I think Workhorse is anybody that's invested in it now, it's going to make a lot of money. And again, I want to reiterate this. Now is the time to get into this EV market, the electric vehicle market, right? We are so early, and there are investors with lots of money that are just kind of like older, they're boomers, whatever. And, they may not see the opportunity. Whereas younger people, millennials, Gen Z, we do see the opportunity. We realize that, electric vehicles, they're coming, whether we like it or not, whether we, think it's 5 years from now or a year from now, they are coming. There's nothing that's going to stop that. Probably automated driving as well, automated cars, that's coming as well. These are the companies that are going to push that industry further. That these are the companies that are starting to emerge within this new space, and I want to be in on that. Another company is NIO. All right. Now, the reason I like NIO, first of all, their cars are kind of cool. They're, some of them are kind of futuristic looking, but NIO is a Chinese company, right? This gives you exposure to an entirely different market other than the US or the West. Now, yes, I know the government probably controls NIO a lot, but I mean, when you think about American companies, right, a lot of them are basically government entities anyways, right? Like Facebook, and I mean, from big tech to big ag, right? They're basically government agencies too. So I want a little bit of exposure in this market because NIO is profitable. They are selling cars. They're in China. There's a lot more people in China than there are here in the West, right? I think there's like 700 million people in Europe, Australia, and the US combined. 700 million. There's like 2 billion in China alone. So, think about all those people driving electric cars, driving a Neo. I want to be in on that stock. They are profitable. I think they sold like 7,000 models back in June. You compare that to last year, 2019 in June, it was only like 3,000. So, they're making money. They've doubled, how much product they're building and selling. And, it's electric vehicles. Again, this is a new emerging market. It's here to stay, and it's going to become more and more. It's going to change our lives. Now, yes, these cars, a lot of them are still going to require oil to function, but that doesn't mean that that doesn't mean that electric vehicles are not important, and it doesn't mean that like oil is going to be obsolete. I like both of them, and it works as a hedge, right? You've got oil, and then you've got electric vehicles. Two of probably the best sectors. I really think those two sectors are going to make me a lot of money as long as I keep investing in them, reinvesting my dividends when it comes to the oil. And, with the EV companies, it's going to be a little bit trickier, right? Because you're going to have to take some profit on the top. We don't know exactly where all of these companies are going, but I figured, if you're putting a little bit into each one, you're bound to figure out which one is, which one's going to hit. And maybe a lot of them do, So that is what I'm looking at. I know some of this seems kind of optimistic, but if you look historically at the stock market, it looks like this, right? Stocks go up. Historically, or for you guys, it looks like this. Historically, stocks go up. The last thing I want to talk about is Apple, because, Apple is going to change the way we live. And it's in a very, very important stock. I want to look at the daily chart with you guys real quick. I know this video is getting a little bit longer, but this is Apple, okay? Here's the deal. I think Apple could fall a little bit more. I think it could go down to about $100. What you see on the screen here on the chart is supply and demand zones. The demand zones are the shaded blue areas, and the supply zones are the shaded red areas. When you look at this, I usually find these on a 4-hour chart. What I'm basically looking for with these zones is a period of consolidation followed by either a strong move to the upside or a strong move to the downside. So it's basically just sideways price action followed by a huge movement to the downside and or upside. All right, that's what these little zones or shaded areas you're seeing are. This is not an indicator. I had to physically put these in myself, and it's basically where there are big institutions that are either selling or buying these stocks, because only the big institutions can make the stock move, move in a really big way, like we've seen this down movement in Apple. Apple has had 1, 2, let's say 3, 4, 5, like 5, 6 down days. It's bound to take a little bounce. Probably what I'm expecting on Monday is a bounce to the upside, but we do have these supply zones. So let's say Apple opens at like $112. I'm going to be probably looking to play the upside until we get to about the $1 and $116 area, and then I'm going to sell my calls, right? Because I'm going to be day trading calls here. I do think it's possible that Apple bounces around a little bit between about 110 to 116. All right, I think Apple could bounce around for a few days, but I also think it's possible that if Apple breaks this demand zone here, meaning that if these institutional buy orders dry up, or they're removed, right? Or they just run out, and there are still lots of sellers, more sellers than buyers, that means this stock is going to go down to about $100. All right. The shaded area, the demand zone here is about $100 to $103. And I think that's very possible. All right, do not be surprised. But I will slowly be averaging into Apple this week. I'll probably pick up another share tomorrow just in case Apple continues to go up from here. But I'm only buying one share on the off chance that I could possibly get my next share for cheaper than 112, right? If it drops down to 85, even better, because then I could probably buy like 3 shares at once one day or something. But realistically, I don't think it's going to go any lower than about 100. I think it's just psychologically, it's at these price levels where, buyers are stepping up. Lots of retail buyers as well are stepping up, but those institutional buyers are going to be stepping up. And, there's these psychological price points, 100, 110, 120, 150, right? They just sort of make sense. When you're mapping out those supply and demand zones, you'll tend to see that they're at those kind of even numbers and stuff. So that's what I'm going to be day trading this week is Apple. I'm going to be trading either calls or puts, and I'm going to continue to build my portfolio. So let me know what you guys think in the description down below. I hope this, gave you some ideas. If it did, let me know what you're thinking. Please comment down below. Where are you putting your money? What companies are you investing in? Are you bullish or bearish on oil, Exxon Mobil? What about electric vehicles? Bullish or bearish on stocks like Workhorse, NIO, Tesla? Let me know your thoughts in the description down below. Follow me on social media, or let me know your thoughts in the comments section down below. And if you want to follow me on social media, there are links in the description where you can follow me on Instagram, Twitter, Bitchute, podcasts, everything. We got it all. And with that, I hope you guys have a fantastic rest of your day. This is CMC Broadcasting. I'll see you next time. God bless.